Hello and welcome everyone back to my channel. Today in this video, like I said, I'm uploading every single day, so there's gonna be content every single day, so don't miss it. Turn on your bell notifications for my videos and stay tuned, because the things that I'm gonna teach you, you can basically use it to improve your life. It's not just some guy running around just for clout. No, I'm giving you guys real knowledge that you can use for your life, to improve your life. And so if you guys really want to learn, then you have to subscribe and follow along. Anyways, enough talk. Today we're going to be looking at something very interesting that's going to be very controversial in a sense, because support and resistance, I'm sure you guys have heard of that. Support and resistance is something that's been used widely by so many professional traders, actually, even till today. Why is that still being used? Even though I don't believe in support and resistance, a lot of profitable traders, in fact, actually use support and resistance. However, there's a trick to this as well. Now, when a trader puts out a course for trading, most of the time, that course involves support and resistance, along with a little bit of the other strategy that they use to be profitable. Now, support and resistance is not the only thing that people use in order to become profitable. There's a lot of other things that go into play. For example, this right here in this notebook, as you can see, has writing on it. What is this writing? It's my own strategy that I've built over the years. However, this is not all I use. And in fact, this is a whole page worth of stuff. This is not all I use. There's a lot more that I have in the back of my head that I go through and I make sure I tick off in my head before I enter a trade. To be profitable, you don't only have notes that you have here. You also have to have your brains and common sense, because the market moves different every single day. A fixed set of rules will not give you flexibility to move with the market. As a trader, your main goal here is to move with the market, not away from the market. You have to move with the market. So a fixed set of rules, yes, it'll give you a baseline, a base to start off somewhere, but it's not going to give you everything you need to know in order to become profitable. Yes, you can have a rule, but you need to also improvise. Improvisation is very important in trading, because every day the market moves differently, guys. No one can 100% predict the market, no matter how good you are. You can never predict the market 100%. However, you can be certain and you can prepare yourself for what might happen. Preparing yourself and being 100% certain are two different things. Preparing yourself means you are ready for either or. Being 100% sure is, I'm 100% sure it's going to go up. I'm 100% sure it's going to go down. I'm 100% sure it's going to go sideways. That's not good. You need to be prepared, not 100% certain, because you can never be 100% certain, no matter what your strategy is, unless you're running the charts, right? So you can never be 100% certain as a retail trader like you and me, okay? Second thing, when people give out their courses, like I said, they teach a lot of support and resistance in their course, because support and resistance is easy for understanding, and also it convinces people that they can make a lot of money with it. Because yes, it does work. I'm not gonna sit here and say support and resistance doesn't work at all. It works, of course. That's why people use it, but it doesn't mean that it works all the time. In fact, no strategy will work all the time. My strategy doesn't work all the time. The profitability in trading for every person is based upon the ratio of win and loss. Wins and losses, the ratio of wins and losses is what determines how good of a trader you are. For example, someone can so for example, when you say I win 4 trades out of 5, that's 4-1 win streak, right? So your winning ratio is 4-1. That means you're a good trader. You win 4 trades and you lose 1 trade out of 5, correct? So, to put it in fractions, you win 4 out of 5 trades, 4 divided by 5, right? So whatever the answer is, that's your percentage of win rate that you have, correct? That's how it is. So support and resistance does have a certain percentage of win rate. However, that does not make it more profitable than other strategy. In fact, support and resistance can only tell you so much in the market that if you want to go more in depth and actually take the next step in trading, you cannot use support and resistance for the rest of your life, because it will not work for the rest of your life, because the market moves differently every single day. And we're going to jump on the charts and I'm going to show you exactly why you shouldn't be looking at support and resistance alone. Okay, hop in.
Support and resistance, one of the main ways I traded, ended up losing a lot of money.
The reason being, support and resistance can never tell you the true way the market is going to move. Yes, it has a resistance and a support, but it can break out of that support and resistance anytime, like literally anytime. If there's news or the president comes to talk, it can literally break out of the zone. Let me explain this to you in a better way. Now, if I just move back a little bit, let's try to find a perfect support and resistance for me to show you guys. Okay. Okay, so this is a perfect example of support and resistance, okay? Right here, we have resistance. And I'll explain exactly what this is in a better way. Just give me 1 second to draw the outlines for the illustrations here. This is resistance. I know it's spelt wrong, don't mind that, okay? I know it's a wrong spelling. And support. Now, the reason that I never trade this is coming up right now. Okay. So there we go. That's our support. The bottom is the support, the top is the resistance, okay? Support and resistance. Let me delete this real quick. Now, why is it called support and resistance? What does it mean? Support is basically supporting the weight of the markets. When it falls, it ends up bouncing back up. So every time it falls to that zone, it ends up bouncing back up. Every time it falls to that zone, it ends up bouncing back up. Bouncing back up. Bouncing back up, right? That's what it means. So when it falls in the zone, it bounces back up all the way. Falls in this zone, bounces back down. Falls in this zone, bounces back down. Falls in this zone, bounces back down. A lot of people, what they do in the trading courses is they just teach such simple stuff as support and resistance that I just literally told you in a minute, less than a minute right now, what it is. They go on in depth of that, which never really works. And the reason they do that is because they don't want to give away their actual strategy that they use, which I'm gonna do. I'm gonna give out my actual strategy here in this course. And to the 7 people that entered my story, that responded to my story, are getting this completely for free. Isn't that insane? The way I make money completely for free. Anyways, support is basically so let's look at this, okay? Let's look at this example over here. Let me draw something real quick. So say this is the ceiling, okay? This is the ceiling of your house. This is the floor. Okay, this is the floor of your house, and that's the ceiling of your house. Now, perfect. Now, let me just make this a little bit better, guys. 1 second. I have OCD in this stuff. There we go. Okay, perfect. Now that's perfect. Anyways, so say you are this person, right? You're this person. And you're standing here. You're this little stick man. There we go. So there's a little stick man standing right here, okay? And you have a little ball. That's a bouncy ball, okay? And that ball is right here. Let's make that yellow, so like a tennis ball, right? And full opacity. Yeah. So this tennis ball right here, what you're gonna do is end up throwing it down and up and down and up. So you're gonna bounce it, basically, right? Let's draw a little path. So say you bounce it down first. Bounces down, goes, hits up, bounces down, goes, hits up, bounces down, goes and hits up. And then so on and so forth. Now this is what support and resistance basically is. Okay? This is what it is. Let me just make this a little bit longer. This is what it is, guys. Support and resistance is just this in the actual markets. So say this going up and down is a little candlesticks that we have over here, right? These candlesticks, they're what going up and down here in this example, okay? Those are the ones that are going up and down. Now you are the guy that's having the market, that are making the markets, okay? And you basically throw it with a certain amount of momentum that continues the flow, right? That continues the pattern. The resistance is the ceiling of your, this is the ceiling. This is the floor. Okay? Ceiling, floor. Now, did I even spell that right? I don't even know if I spelled that right, to be honest. Anyways, who cares? So this is the ceiling, this is the floor. Sorry, excuse my chair. This is the ceiling, this is the floor. Now, when you throw with a certain amount of momentum, it goes and affects that. Now, in the real markets, it's not going to look like this. Even in real life, it's not going to look like this. So let's erase this. Let's draw it a little bit better, okay? A little bit more realistic. Now, when you bounce it, it's going to go bounce here, go up, bounce here, go down a little bit, go down a little bit, bounce again, bounce again, bounce again. I'm trying to make this as, like, good as possible. Again, so on and so forth, right? You guys get that? That's what it's gonna look like in real life. The momentum is gonna decrease as you bounce it, correct? Now, the problem is when this happens, you need to understand something. This is heading for a bearish market structure. Why? Highs, lower highs, lower highs, lower highs, lower highs. So basically, the next high is lower than the previous high. For example, this high is lower than this high. This high is lower than this high. This high is lower than this high. Whenever this happens, there's something called a breakout that's about to happen to the downside. Boom. It's going to end up leaving. It's going to end up going down. This is what a breakout trader is. A breakout trader is essentially someone who identifies this breakout trend that's going to happen. Again, in trading, like I said, you need to know where the market is going to be, not where the market is right now. They identify this trend and they enter a short position. They sell right here. When they sell, price goes down and they make money, right? Now, the same way you can reverse this. Can I reverse it here? No, I can't reverse it. So what I'm going to do is delete this and redraw this, okay? Sometimes in the market, it's not like real life and there's no actual physics involved. So let's make it a little bit more market-like, like trading markets-like, okay? Sometimes what could happen is it could end up doing this. And this is, I know this can't happen in real life, but trading doesn't have physics involved, right? Obviously. So this can end up happening. When this happens, what does it tell you? So for example, this is the lowest low. This low is higher than the previous low. This low is higher than the previous low. This low is higher than that previous low. This low is higher than the previous low. This low is higher than the previous low. This low is higher than that low, and then so on and so forth. And there's going to be a huge trade to the upside. That's what you need to understand. Okay, this is again a breakout to the upside. This is a bullish breakout, whereas this would be a bearish breakout if it comes through here. So same thing, comes here, comes here, comes here, comes here, comes here, comes here, 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 boom. Bearish breakout versus bullish breakout. So this is a bullish breakout, this is a bearish breakout, okay? Now a bullish breakout could result in a trade going upward, bearish breakout could result in a trade going downward, okay? Both of them are based off of the support and resistance whole idea, right? Now a breakout would be an example of right here. This would be a breakout. As you can see, market is playing, keeps playing, keeps playing, keeps playing, goes up and down. This is the resistance, hits the resistance, comes down, hits this part, goes up a little bit more. This is a smaller time frame resistance. Right here, if you can see. This is a smaller resistance, but it is still a resistance though. Again, this is not a good way to trade. I don't recommend you trading this way, but I'm teaching it because it's one of the ways to trade. And I did this. I lost a lot of money here, so don't trade like this. Do not take this particular video as trading advice at all. Just understand how support resistance traders trade and understand why they make the mistakes that they make. Okay? boom, they end up breaking out here, and this could be a trade that I mentioned right about over, where's our illustration? Right here, the bearish breakout. Okay, that's what this is right here. That's what this is right here. You guys got that? So that is this. Boom, goes down, ends up breaking out of the zone that we have, and then this could be a nice selling option. But the problem, here's where the problem comes in, okay? You never know. So support and resistance traders only can trade when the price goes to the bottom or the top, where they know that, okay, this is the resistance, now it's gonna go down. But they can never, all of these things they're missing out here, right? Let me just like make this a little bit more clear. They're missing out on all of this. All of this is being missed out on because they are support and resistance traders, right? They miss out on all these beautiful opportunities that they could have made a lot of money if they followed my way of trading, which is the market structure, which I say whenever you identify the market trend and trade with the market, right? Boom, here I would have entered, came down, here I would have entered, came down, here I would have entered. Every time it came down, I would enter. It makes you so much more money than if you just enter over here when it touches this zone and when it touches this zone. This is why it's a bad way to trade. And most of the times, if for example your emotions come to play, this is when I started trading, and if you guys are new to the trading field, you would also experience this. If you're emotional and you end up wanting to trade in the middle, if you're a support and resistance trader, you'll be completely confused. For example, this would be a resistance here. You would identify this as a resistance right here. This would be a resistance. Why? Because price here comes down, hits here, comes down, hits here, comes down, hits here, comes down, hits here, doesn't come down, ends up going up. So you would take a short position here because there are two red candles. So that would tell you, oh my God, it's gonna go down. But look what ended up happening. But if you didn't trade this way and traded my way, you'd understand that the market is a bullish market and that every single thing right now is going to be bullish until you see a confirmation that it's going to end up being bearish. Okay? So my way of trading, you would do this. Oops, give me a second. But you would do this. Green, I would enter over here, take money. Green, retracement, I would enter over here, get money. I would enter over here, get money. I would enter over here, and this is not new. I already explained this to you guys, like in the previous video. This is how I trade. Get money, boom, go over here, get money, and then here again, it would get money here, and then again over here, I would get money if I traded up. This is how I trade. So do you see the amount of capitalism that I could have made here by just understanding market structure rather than support and resistance? This is the problem with it. And this is a very good example. You would understand this is resistance and you would expect market to go down. And also, this is a very good way to trick support and resistance traders. If I erased all of this side and I just showed you till right here, every support and resistance trader would say going down. They're gonna short, they're gonna sell. Okay? For example, if I did this, let me just do something real quick and show you guys what I mean. If I just did this, okay? And the background is completely white, and change the opacity to max. Now, and move this forward. Style. Why is this not working? Anyways, so if I did this and I asked every support and resistance trader what they would do right here, they would say sell, because they don't understand where the market is going to go. All they see is this resistance zone right here. They see the resistance and they would say, okay, the market is going to go down. But however, that's not how the market works though. If it's a bullish trend, market is gonna go up. That's how it works. That's how market structure works. A lot of traders, when they're selling courses, they end up doing this and you guys buy it. And that's not the good way to do it, okay? Market structure is the way you go. That's the only way to be profitable in the trading field. Market structure, market structure, market structure. Anyways, that's it for this video, guys. This is why you don't want to trade support and resistance. And I hope you guys understood and found this helpful. I'll see you in the next one. Goodbye.